Welcome to the AAI Financial podcast, where we're going to tell you a little bit more about why AAI. I have my co-host here, Matt Russell, who is the founder of AAI. He's been my boss since 2018. He brought me on as one of the first salespeople to join the team, and we've been through the thick and thin of it. Good deals, bad deals, learning a lot and growing this vision that Matt's carried on. And feel like I try to champion it myself of what we do here at AI. And I think we want to share a little bit more about what that is for our clients.
Welcome to our podcast, guys.
So Matt, tell me what's the core values of AI? Let's talk about that first, because I think we can kind of build on that from.
Yeah, we have four core values here at AI. The one that drives our decisions is advice first. That is the one that sticks through everything else. Is we're here to advise our clients before we're here to do anything else. Our goal is to get the clients to their ultimate their financial goals through the commercial real estate brokerage industry or other, their business, their real estate, whatever it may be, help them achieve not just their short-term, but they're also their long-term goals and setting them up for success. So we like to do that through the advisory role. We focus on advice first, and that might be advising them to walk away from a deal. That could be telling them to structure a deal differently, or whatever it may be. We're trying to advise them steps along the way to make sure that they're setting themselves up for success, similar to how a financial advisor does it for you in your stock portfolio.
We all know a lot of the investing clients we work with are the types that like to just keep doing deals. And so sometimes we need to tell them, hey, you might be able to do these all short term. What if something goes wrong in one of these deals all at the same time? You put yourself in a much tighter position. And that's where that advice comes in. We're not always just trying to get the one quick deal done. We're trying to make sure we have a client for life.
Yes, we look at it from a holistic perspective, not just the individual deal, but their overall financial position, their portfolio, and take them to where they need to be at that point based on their goals.
So what do you think is the biggest why AAI? If you had to give your elevator pitch to a client.
We're along the side with you. We're building relationships here. We're not building a one-off transaction. Most of our clients are, it goes back to one of our other core values, which is the long game. We're here for a long time with the client. We want to continue to work with them and build up their success along with our success. So why work with us is truly we're a partner in this transaction and not just a facilitator for them. We're actually a partner. In a sense, we've actually become partners on deals with clients because we understand their position, and they have a great deal, but they can't finish it without some other assistance, some other financial need. And I've been able to invest in deals with my clients because I see we build this as a partnership, and I have a lot of long-term friendships from this business too. So we look at it, we truly care about our clients and not worrying about the money. I've always believed if you take care of your clients, you take care of your employees, at the end of the day, the business will be taken care of.
Agreed. Well, I always tell it kind of like you've talked about with me many times that we're very much similar to like financial advisors for stocks. Just like you would have someone telling you, hey, calm down at the bad times in the market, or hey, you need to get investing when things are starting to go good, and how to manage all your different stocks, what's to have, and your portfolio breakdown and all that type of stuff. That's what we do for the commercial loans and the investing side, because there's different products, there's different lenders we go to, there's different structures for it. Sometimes you want to buy a property, and the best way to get financing for it is to refinance a different property you own, because of where things are right now and that property's condition. There's different ways of going about it. And that's where we always try to come at it from that perspective.
Yeah, we look at it as endless possibilities. Another one of our core values is you present as A, doesn't mean we're going to go with A's option to get it done. There might be a different way to accomplish that goal, which is more efficient and better for you financially. So we look at it from that perspective instead of looking at it, oh, so you want to do XYZ. Let me go handle XYZ for you. Anybody can handle XYZ. So ones that we try to add value back to our services, and as it's using the CFO advice. I'm a recovering CFO. I've been a CFO for the majority of my career. And so I come up from a financial advising perspective and understand numbers in depthly, along with the rest of our team here at AI, that we really look at your financial position and how to better you and how do we overcome these obstacles to do so and come up with a solution you might not have thought of yourself. I'm not
Exactly.
here. Typically, when you go to a bank, they're going to just push it through the way they know best. And as a borrower, sometimes you don't know there's other ways to do things. So you just follow what they've been showing you. We try to come up with a different solution that the bank will still say yes to, but they haven't thought of before. So we try to come up with different possibilities to accomplish to get to the same end result, but maybe in a better position and in a faster route, whatever it may be.
Agreed, especially with how we go about servicing our clients by getting them a couple options when we're shopping. I mean, that's one of the biggest thing, the time saving for them. They could do that and they can go to 15 lenders like we do if they really want to at the end of the day, but that's so much more of their time that they don't need to be investing on that. We do that all the time, and we have the relationships we have with lenders that allow us to get faster yeses and faster nos and get through their process and get lenders on board with maybe our out of the box thinking of here's how to structure it.
I would say we look at this as a 50% relationship back with our clients, and the other 50% is back with our lenders. And understanding our lenders we have deep relationships with where they actually send us referrals. They know that we can actually accomplish what the client's looking for. I had a deal recently where they said, hey, I could do this for them, but they're going to need assistance with this SBA 504 deal. I told them to go to you because they're going to need your assistance to get through that. So we did that. And that comes back to our last core value, which is a simple button. We take the headache out of the lending process for them. Once we have our data and our information from the borrower, we're able to then navigate the rest of the process on their behalf without them having to do much more work involved. So they can focus on what they do best, which is running their business, running their real estate, doing their
Finding properties, whatever
doing
it
their
is.
doing their day job. If they're just a passive investor inside, whatever it may be, they need to focus on what they do best, and that's where we allow them to do that time so we can focus on what we do best.
It seems simple, but I feel like what we're constantly working against in the broker world is that that's not what most people do, and that's not the expectation that we're up
Now,
against when we meet new clients, and it's not the expectation when we meet lenders. Oh, you're a broker? Well, we don't want to work with brokers, and that's part of what will lead to at the end of this podcast. We're going to have an interview that we'll share with you guys with one of our lender partners that they spoke to us recently. Matt, you can go a little bit more into that about their positive words of our AI
yeah,
relationship.
and we hear this from multiple lenders is we don't work with brokers or many brokers at all because most brokers out there give the industry a bad name. They usually send a deal to a lender and then walk away and come back later in the transaction. We are, I look at ourselves as a bank with endless possibility. We're a bank with endless possibilities. The only difference is we don't have our own direct funding source behind us at
Exactly.
bank terms. So at the end of the day, we handle that loan from A to Z. And that means, driving somewhere extra to get a document signed from a client, if that means
Helping
handling
withdraw requests.
helping draw requests on a construction loan, whatever it is to make the borrower's situation, make their life easier and make our lenders' life easier. That we have now, as Ben was mentioned, we've got some lenders who they've cut off all broker deals, but they haven't cut us off. And the reason they haven't cut us off is because we make their process easier. We make the lender's life easier. So they're calling me asking, do you have any more deals I can work for you? Because I love working with you. they go to bat for us when it goes up against, management, and they go, "Well, no more broker deals." No, this is a little different for this client, and this one we'll get into
We're
the
not your
interview with
traditional
one of our lender.
brokers.
Yeah, we're not your traditional brokers. We're more that outsourced CFO for you, except for we're not doing your financial books for you, but we're that more that outsourced CFO advisory role in assisting you in accomplishing your financial goals in the business and commercial brokerage world.
When you think of why AAI, what's one of the things that is not what we've talked about so far? What else differentiates us?
We're somebody you can call on the phone. We're personal. You're not going to get the assistance. You can if the assistant's handling something on our behalf, but you can call straight to the boss and get something. You can get to somebody who's got the pure vested interest in this company on the phone. And as Ben will know, I'm there every deal that the sales team has. I'm there along the way. Sometimes sometimes the process is running smoothly. I might not know much about it, which is a great thing. But not every deal, especially here in 2025, as smooth as they were 3 years ago. And so being heavily involved in deals and understanding what's going on, that we're able to, first of all, navigate any questions from lenders. So when we get questions from lenders,
Yeah.
if you want to see the request list and the question list that we actually receive versus what we actually pass on to our clients that we may not know at that point or may not have the information, we have reduced that list drastically down because of our in-depth, how we in-depthly involve ourselves in the transaction and understanding it from an underwriting perspective and making sure. And I've been a banker. I'm pointing out their errors. And we are handling it that way. I'm going, "Oh, no, go look over here. Oh, yeah. Thank you for pointing that out to me." So we're there to help them do their job to the point where we have underwriters from lenders sharing their underwriting with me because they go, "Can you?" I'm seeing it this one. I go, "Oh, no, you missed this or you didn't catch this," and pointing things out to them. "Oh, that's what I needed. You're right. This does work." I'm like, "Yeah." Our back of the napkin math is faster and pretty damn reliable, and they're doing it complicated and they miss things because we have a simplistic way to do things. Because I think the hardest thing to do in life is to keep things simple. We all want to complicate everything. The more complicated it makes everything sound, the more people feel like they're valued. At the end of the day, keeping things very simple and very basic is one of the hardest things you can do. And I think that's one thing that we also strive ourselves on. We try to keep this as it's a simple and basic process. That's where we can shine in the sense of, "Oh, that's what you want." And people look at us and go, "I don't understand it." Well, that's where my expertise comes in, where Jay, our underwriter's expertise comes in, or Lydia, our processor, her expertise comes in. We got the tools around us to
Oh,
be
we're
able to.
frequently getting lenders asking our processor, like, why are you guys helping with all of this? Because we want to serve our client. It's what we do. I mean,
Are you getting paid extra for doing this? No, this is just part of our, I call it the white glove service. I'm here A to Z. I've had clients reach out to me and go, "Hey, that transaction we did 2 years ago. Here you go. You want this? Here's what happened. Let me call the lender on your behalf." Oh, every year they need their annual due diligence done because that's part of their commercial loan requirement. It's part of their covenants. "Oh, you need some assistance on that, or you want me to double check where you're sending them, make sure everything looks good and you're tidy?" Perfectly fine. I am here for not here for I'm here for a long time for my clients. I'm not just one transaction. We're not transactionally based. You know, Something that's the other reason commercial brokers get a bad rep is they're transactional. They're just moving to the next deal. No, I got clients on repeat that I do 4 or 5, 6, 7 deals a year for clients. I've been doing that they'll text me a deal. They'll say, "Hey, can you do this for me?" I'm on it. Gotcha. Don't need anything else. I got all your financial package. So we also try to make it easier that rinse and repeat client. "Oh, I need a few extra items for you." We have their full file. So we try to go above and beyond so that we're not doing this for free, but
no.
when they go to pay us, they're going, "Damn, I don't think I paid you enough."
I'd much
That
rather
note,
it be that way than them trying to justify why we got paid what we got paid. So
yes,
we let's put in
you
more work
know,
than necessary.
and I think that's the bad stigma out there in the industry is these brokers just send some to the bank, walk away, and then ask you to pay when the loan goes to close. We're not that way. I want to
No.
communicate. We're involved in the insurance, making sure it's being perfected, right? Making sure title's clean with the title company, making sure that any of the questions, documents that's needed from the lender is handled on behalf of the client so they can go to the closing date. I mean, we've even acted as I've closed deals where we were closing it outside of escrow. I've closed deals at my office at, getting things notarized for clients. I've handled transactions for them. I'm not the notary. Make sure I note that, but we've
No,
had
we don't like to
offsite
double dip
notary.
that much.
We do have a notary that comes in. We are doing things that is extra for the clients to make their life easier. Um, so that's trying to where we differentiate ourselves again, as we like to go above and beyond what's asked for from us. So sometimes it's not even asked from us. I just expect higher from us than when I see out there. Not saying the bar's set low, but the bar has been set low out there in the industry. But we're going to be around for a long time to make sure our clients are here for a long time. And at the end of the day, when we're and Ben, you and I have talked about this, when we're 75, 80 years old, it doesn't matter how much money I've made in my life. It's all about the lives that I've impacted, right?
Yeah. The
I
problems
mean,
we've helped solve. I mean,
what's
even
the
less than the
relationship?
deals sometimes.
The relationships that build along the way, and
Yeah.
it's making a positive impact on people. That's where you get good relationships. It's hard to have a good relationship if you haven't made a positive impact on that person. So I believe that's where, as part of my life goals is to be 80 years old and go, sweet. I had a good family, I had good friends. I built a lot of great business relationships, was turning the friendships over the year. And now I'm sitting in at my retirement home with my buddy that we did deals together for 40 years together. And we
Yeah.
became friends because of what I helped him 40 years ago. And he's sitting there very financially well off, probably sitting on his mansion, not mine, but sitting in his mansion because I helped him build that net worth. And at that point, I know that I have done what my God given talents were to do was to help other people in the financial world.
Yeah. And really be problem solvers, not just always on their direct request, but helping them in so many areas. One of the biggest reasons I feel like our relationship with our lenders is so good too is because they care about their clients. And when their bank changes their appetite for different programs or different things, they want somewhere to send them. And that's where we have those good referral relationships with those clients and lenders because we take care of the client, they want to send us other people. We take care of our lenders, they want to send us their people when they can't deliver.
Yeah, and again, it comes back to that relationship. At the end of the day, this is a relationship world, and everything we do is about the relationships we build. We might all have the same products, is how we deliver those products is the key. It's the quality of delivery for me. And something that we do that differentiates us too is every month. What do we do every month, Ben? The first Monday of every month.
So the best part, we go through the deals and we figure out what did we do right? Did we do good? What did we do bad? Where can we grow from? What were the lessons learned? And dissecting how our deals that have closed both lost funded and or lost or funded.
Our goal is to improve, continuous improvement. That's something that Ben and I both have been working on in our daily lives, in our personal lives, and our professional lives. Is that 1% growth every day? If you do 1% growth every day, think about that over 365 days. So if anybody can do the math for you, that's a pretty stagnant
Pretty
growth.
good return.
Um, Yeah, it's a really, really good term for yourself. And we try to do that. We apply that to our business too. And every day, and it's not anybody's at fault. We're not pointing fingers. We are there to, because it's not about us. We're taking ownership. We're humble enough to go, man, yeah, I could have done that better. And we put the stopgaps in right away. And sometimes when we talk about our lessons learned, we've already put the stopgap in place because the moment that it happens, we figured out a solution to make sure it doesn't happen again. And we document this. So when we do have documentation, we don't have to go back and screw it up again. It's not,
We
you
don't have to
know,
keep learning the same lessons again and again. I
yeah.
mean,
So
go for it.
what makes you think, what makes you, Ben, think that we do this different? And what stories have you heard out there in the industry?
I mean, one of my favorite stories is just my relationship that I have with my client, that's an oncologist, and he owns many rental properties. That's how we got connected. But because of our relationship, even though the first two requests he had, we ended up advising him not to do it. And it ended up coming around that now he's my biggest client and he has me help him with things all of the time. That just shows, and things that are not just about a loan request, but hey, can you call this lender and help them because they didn't, my payment got sent back to me. I mean, the silly little things that he just needs someone that is in his information. He's told me, I you probably know more about my personal financials than anybody else other than my accountant. And that's where like that relationship gets so tight because we're there to advise all the time. We're there not to just make money. We're there to take care of him, make him grow, and make him more successful. And in the end, it's only helped both of us out along the way.
And really, it is those little things that you do for the client. I mean, and that's one of the things I tell clients, one of the first things I ever tell clients is, dude, if this deal doesn't work and you find another deal, run it by me before you get down the path. I will put together an analysis for you, make sure it makes sense before you get down the path. Come to me
Oh yeah.
beforehand and let's see what we can do for you. Even if I do the numbers and you go, yeah, yeah, we both agree, let's walk away from the deal. That's what we're here for, is to, did I win anything from that? No. But let me retake that back. Did I win anything from that? Yes. I won because I helped my client make a educated and informed decision. So
We
to me,
won that respect. I mean, by giving him just the advice, even if it meant you don't do the deal today, we don't get paid today. I always like telling the client the no upfront fee. Like we're going to work with you all the way down, and only if the loan closes do we get paid. Charge our fee at closing, and that's when we've earned our work. I mean, before that, we're still working to earn it. And that's shown in us shopping multiple lenders for you, being a bulldog to the lenders when maybe they're being a little difficult at times, or being a bulldog on you to get the stuff that we need so that we can keep this loan on track and you don't get put behind and put at the back of the line, because that happens all the time as well.
I got a client tomorrow morning. I did this loan 3 years ago for them. They're having problems with their lender. I'm going to their office. I could join the call from my office, but I'm going to their office to be with them in person to join the call and help them navigate the situation in with their lender. Are they doing anything wrong? No, but they're having difficulties with their lender, and I'm here to navigate that scene for them because
That's what we do.
we're not just one and done. I'm here throughout that process. When that loan pays off, maybe I feel like I'm done with that, at least that transaction, right? But I'm still with the client. So for us, that's what we value, is just those long-term relationships and building that up for clients and watching their success. I mean, some of my favorite projects is probably ground up construction,
Yeah.
or when
We really
or
get
when
to be a
some
part of the whole vision from an
or
idea
when
to
yeah,
execution.
or when somebody gets into their first transaction, or
Like their first flip, watching the person excited after they finish that first flip.
bought their first bit, we got them a business, or they're able to get some finances that help them expand their business, or we've helped people come up with solutions. They go, man, I didn't know that. That saved me, $1 million a year in cash flow. Well, to somebody that the most many people be like $1 million a year. This person, $1 million is a decent amount of money, but they were able to do other things because of this, the solutions that we provided that they didn't know existed at the time.
Yeah.
And they didn't know that they didn't know they were getting screwed by their incumbent lender. That's the other
Mhm.
thing that we can kind of tell clients is keeping your lender honest.
Yeah.
I'm going to tell you if your lender's got the best deal out there. I'm going to tell you, move forward with them. If you need our assistance, we're here for you. But if not, go with it, please, because I'm not here to just get you to switch to us. I'm going to build up credibility over time. And
Exactly.
you're going to go, I've had people go, wow, it sure screwed me on this one. Next time I'm never going back to them again. I have warned clients because that is one thing that they go, man, they kept screwing me. And then you kept just being here when I needed sound advice, and I never paid you anything this time. Just going back to the sound advice, and I'm done going then. I'm coming to you. And not we're not a hard salespeople. We're here for you. And our I think our proof is in the pudding, right? That's what they say,
Well,
right?
and how many
Um,
times has like those few broker deals that we do where they're supposedly a broker and they're bringing us a client and they can't find an option for us, and we end up going to 30 lenders because we don't take no for an answer, and we put in the work and we end up getting a loan done. Like, that's not a one-off thing. We put in the time. We reach out and scour for lenders so that we can find the right option. We don't just take no. Oh, sorry, our three favorite lenders don't do it. We can't find you an option. Like, we're there for our clients. We're going to put in the work.
yeah, persistence, and I'm a Detroit Lions fan, so anybody's watching this in Seattle area, don't hate on me. But Seahawks are number two. But Dan Campbell, the way Dan Campbell coaches, the way he leads his guys, and they just don't take no for an answer there. They just push through and grind. And yeah, it's kind of how we look at this is, yeah, we got we got some brains, but we also have the desire and the passion to get things done. And that's what try to differentiate us. We just don't stop. I mean, my goal is to, again, accomplish that goal for that client. Don't take no. I mean, oh, cool, you told me no. Why'd you tell me no? Okay, you missed some here. Try to correct that no and turn that no into a yes.
And even
Um,
if it's truly a final no for that lender, see if they have ideas of other lenders that this might work for. Because we all know each other. That's the relationship business in this. There's not a lot of people that spend their whole time doing commercial lending their whole life. You end up getting connected and you end up building those relationships on both sides, clients and lending side. That's why lenders move around banks all the time, because there's a good one here. They go to three other banks over their career. So,
yeah. So, anything else you think that makes us different, or what have you been? You've been here almost since the beginning.
yeah, Matt started AAI in
What
2017 and I joined in 2018.
What have you learned as we continue to grow and mature as a company, and obviously as individuals? What disciplines are changing you to help in your life that drives some of this?
To be honest, it's really cool to see how far we've come from, like, we were always had the right intentions, but we didn't always have the best processes or the best actions on those intentions. And so we've kept the good intentions all along, but we've continued to grow and refine and make our process better, not because we just want more loans, but because we want to provide a better service. Not that our service was bad before, but it can be better. And that's where for our clients, they're always going to continue to get the best from us, whether they're asking for more from us or not. We're going to continue to refine. I mean, from the work we've grown in dialing in our Salesforce CRM to using it better for our clients to working on the AI capital that's coming and a fund that we're going to open up for our clients, and all of the other ways that we've continued to provide more. You opening the AI real estate office, and just we're continuing to not necessarily just double dip and get our hands in more things, but provide a one-stop shop that really we can be that advisor. We can be that resource for our clients, because most of them, they want to either find properties all the time, work their day job, or they need to run their business. They don't have time to be thinking about this, but this is an integral part of every decision they're making. Can they afford this next property? How fastly should they acquire them? Should they slow down? All of those things. That's where we're giving our advice back, and that advice comes from the level of detail we do with our underwriting. I mean, I don't see most brokers do that. I mean, we even have lenders tell us, "Wow, this package is better than we do for our our credit memos," and so, like, we put in the work to make it easier for the client to get them the best results. And that's why lenders end up giving us a better deal sometimes than if the client went directly to them. We save the lender, a lot of work.
Well, I want to go on your point you just brought up then of our underwriting. This is Jay out there, underwriter. We underwrite just like a bank does, just like a credit, your financial institution does. We underwrite it in a way that makes their life easier. But we've got to the point where if something changes on a deal and we need, and I'm like, okay, just no, can you re-update your underwriting on your end? Because they take our packet, our underwriting offering memorandum, we call it a CLR internally, commercial loan request. They take our packet to the credit team to get sign off. That's how much detail and focus that we do on that, that we are able to, that's another differentiator. We put the detail in to make the lender's side easier, and the lenders want to work with us, and they know if we're bringing them a client, they know this is legit, and they put us to the top of. I get my phone calls returned. I get texts. I go and maybe have a beer with the lender, and it's not because they kind of wine and dine me. It's because they really enjoy the business that we give back and forth, and we respect each other in our game. But our underwriting helps differentiate us, Ben, and it's
Yeah,
so we do it so well that we've actually underwritten, been an outsourced underwriting for credit unions, not our deals, but for lenders who were at capacity and they need to offload some of their underwriting. So we've been there to help do that. So we underwrite to that thing, and that comes from our experience.
yeah,
Comes from my experience in banking. Hey, now I am up until this company. I spent my first 12 years in the industry in banking,
yeah.
starting out. I've been in credit unions my whole career and started in the accounting department, worked my way up to the CFO, been a CFO for many years. I had a stint as a CFO and chief lending officer, oversaw collections, oversaw, consumer lending, mortgage lending, commercial lending, always been in a commercial, loan committee for approving deals. So I've been there. And Jay, our underwriter, same experience. He's been a chief lending officer. He's been a CFO. He was an interim CEO of a credit union. He has spent that time in the underwriting and understands that world too. So we come from
Hmm.
that recovering banker world, and we bring a different
Recovering
approach.
banker.
We come to a different approach to it. We are a logical, does it make sense? We're not trying to, you know, push something out there that doesn't make sense for people. We take the deals that make sense too. I'm not trying to we can get anybody financing if you really want.
Yeah,
Not my end goal. My end goal is financing for my client that makes sense and puts them in a better financial position. If it benefits me financially but does not benefit them financially, no sense in doing the transaction.
or it puts them in a pickle potentially later. I'd rather say no to the client because
I never want to see one of my clients, oh, we went bankrupt because the loan you got us. Well, shit, I did a bad job.
yeah, that money's already gone for me, and I feel bad now because your life for it does.
Sure.
It's not worth it.
You know, um,
I mean,
you know,
also, I think going off of you were talking about Jay, and one of the things that made me think of was that silly quote of if you love what you do, it's you never work a day in your life. And I feel like Jay loves what he does so much, and I feel like you love solving these problems and working with clients and building the relationships. I know that, like you said, when I'm old, if I get a client that I've worked with for a long time that's, hey, can you get me a loan? I'll still make calls. I'll still get people working on it for them because I'm never going to want to stop working because it's not really work if you enjoy what you do. And I
right.
enjoy giving back to the clients. And that's a big differentiator. I do feel like a lot of the people that are brokers in this space are in it for the money and they are so sticky on, well, I need this X amount for my fee if we're going to broker it with you and all of those things. And it's like, it's not about the money. I mean, the money's great, but it's not about the money. And if you just focus on the money, you'll never reach that happiness feeling that you get from just helping people.
It comes back to we truly care about our clients and their financial well being. When you care enough about somebody and the person in front of you, that differentiates yourself from others. And
Yeah.
it's us putting in the processes and putting the staff. And I continually go to bed every night going, okay, at what point do I need to add the next person, the next process? Even though obviously that's money out of my pocket, but it's for the betterment of my clients. I'm always looking at that. We invest in a lot of technology for the betterment of our clients. We subscribe to things that most brokers don't subscribe to because the data helps us with our clients. It's worth this for their financial well-being. So we look at that and continue going every night. Go, what's next? What's next? I'm always thinking about what do I grow this? What am I doing next to get to where our clients are in a better position?
I feel like we could go on for this for days, so I'm going to kind of wrap us up here, Matt. Not necessarily saying if you
No,
have more to
I
say,
think
but I feel like we just love this too much, so we could just talk about it for days. So
that's a great stopping point, Ben. I think, everybody will enjoy the next two guys that will be coming on this podcast. It's the second part of this podcast. They're great. Been working with them for years with transactions at the couple institutions they've been at. They come out from the same mindset we do too, and that's why we work well together when we send deals, is because they truly care about their clients too, and we have mutual respect with each other, and we know that we work well together, and so they really value what we do, and you got to hear it straight from the horse's mouth. What differentiates us from other brokers out there. You will be able to hear it straight from somebody who's on the other side.
yeah, and hopefully they only say good things about us.
It's unpaid, so we'll see what they're going to say.
Hopefully it's all good. Awesome. Thank you. Hope you guys enjoyed this and enjoy the next section. We're people. We like to have conversations, relationships, and we just want to hear a little bit more about why you guys like working with us and what's your experience been of working with AAI.
Charlie Drader. She's been banking the Central Washington market for 20 plus years now. VP of Commercial Business Development here at STCU. Born and raised in Central Washington. And so, yeah.
Rudy, you got to give us a little background on Rudy before your banking experience, because you're not just a banker, Rudy.
Yeah, Rudy Mendoza, been in banking also about the same time as Charlie. We've been working together for my entire life in banking, which was started in 2006. Moved over from doing engineering and sales type work to doing banking. So raised in the Tri-Cities, moved here when I was 4 years old. Man, that makes me almost 50 years in Tri-Cities. I'm 53. So yeah.
And it's great, you got different experience than just banking, so it always lends, other real world experiences, we'll call it. I
Yeah.
would not consider the banking as real world experience sometimes, but it's a difficult industry, but having other avenues, and Charlie's also a business owner as well, so he gets these small businesses and things like that as well. So that helps out having partners like Rudy and Charlie behind the scenes who understands what we're doing in that regards. So we've been working here with Charlie and Rudy a few different places. Now they're at STCU. We won't talk about their prior business places, but we've been working with them, and it's been a great relationship. I think I met them. God, it was one deal I was trying to refinance away from a bank, and Rudy called me and goes, "Hey, would you like to keep it with us?" And we have built a good relationship over the last 5 years doing that. So it's been good working with these two on a lot of deals. And we are a broker, the dirty word, but we try to treat ourselves different. So that's why we got them on here to show that we do things a little bit different than other brokers. Hopefully we do things different. And we want to hear from the horse's mouth though.
As you said, you're while you get lumped into that broker kind of name, I think that your organization, AAI, provides much more value added, beneficial things that help us on our end when we're looking at a deal, especially now being at a credit union. Your understanding of what it is that drives credit unions and understanding, just general banking policies for lending makes it a lot easier when we get a package from you to really understand the deal.
What you bring to the table is not, so some brokers out there, what we get is we get a package. It's like, here's the information, here's the financial, but there's not here's the story, the understanding who the borrower is, the ins and outs of how their business works. That, I think that's the difference with you guys, Matt, is You bring to the table a true understanding of what their operations are, how it works. Like I said, almost like a CFO type role.
One thing that we request that, is always weird when I request it. People are like, what? I go, I need a bio and a resume on you. They're like, why? I go, lenders need to know their borrower. And if we don't know the borrower and I don't know your ins and outs, I can't do my job, which is advocate on their behalf, right? Is truly make that advice back to them. And sometimes I've advised clients not to do a deal or structure a deal differently, but I have to understand who they are, right? If I can't understand who they are, you guys can't really lend to them. And
you have to understand who they are, right? So we're looking for credit decisions are not just based on numbers on a piece of paper. It's what's the story that goes with it. Why, especially on those deals where maybe where something is on the fence. Understanding who they are and why they're doing it and why the numbers look the way they do.
What's their background? How do they get from here to here, right? How do they get from A to Z? Like, numbers only paint one picture. Yes, they are very good numbers. Numbers are numbers, but there's got to be a story behind numbers.
Yeah, Matt, I would also say that what you bring to the table or your group brings to the table is, as Charlie said, most brokers just send you a package. There's no analysis given to it. There's no, additional background given to it. When we get a package from you, you've given us mitigating factors, right? The numbers don't always, like you've all said, right? The numbers don't always tell the full story, but telling the story behind the numbers and why, right? Well, hey, this is an organization that's been in business for 3 years. They were very profitable. The numbers looked a little different because they're in a growth spurt. So that's caused some, some constraints with cash flow. But, getting that full story allows us to be able to, find a way to look at a deal differently than just the bottom line.
Every deal is a good deal when you make it, right? But we gotta understand where they're going down the road and how they got to where they're going and what's their decisions going forward. Are they asleep at the wheel? Or are they all hands on deck? I mean, there was a deal that we did. I think it was really good. You guys worked really good on that when you guys are one of your previous employers on the BioGrow, where you guys did phenomenal work because they were in a position they need to reposition their balance sheet, right? We repositioned their balance sheet, got them in a much better place. Then you guys have taken them back over to STCU, right?
We have been fortunate enough to do so. Yeah.
Yeah, it's a good relationship there that we helped build over time together. So that was a good success story because they were in a position, like you said, the numbers painted one picture, but we had to hear more of the story than just that.
And that's that, in the current environment, financial institutions, we're looking for full relationships, right? The time and place of when there was a lot of liquidity out there in the marketplace and it was like deploying those funds and making it work for you are kind of behind us, at least in the current cycle, right? So what we're looking is for full relationships, and you understand that. And so when you're bringing deals to us and preferably C&I deals or owner occupied deals, that conversation is being had up front with those members or those potential clients of ours. And they understand that, yes, they will be looking to bring deposits and everything else and all the other banking services, which makes it a lot easier from our end to sell that relationship with the decision makers.
Yeah. The credit pendulum has swung.
Yeah, it has.
So I was going on the credit pendulum has swung, and it will always swing. You guys have been this long enough to know this will happen. Then we'll go back to where it was before. Things will always change. It never just sits in the middle. It's this way or this way. It's never just in the middle.
It's hard for it to find balance with so much pressures on either side.
Going back to your comment on the understanding where people are going, what they're doing. If you're doing this is like, hey, we're making an acquisition right now, and then we're not no more expansion plans for the next 5 years, you might structure something one way. Whereas if it's hey, we're making this acquisition now, but then our plan is another 18 24 months is that we've got this on the horizon, you might structure the current deal different. So having that full understanding, the full story of where you're going absolutely helps.
I think it helps that we have myself with CFO experience, and my underwriter has CFO experience too. And we're both from banking. We're both recovering bankers, but we we look at it from a CFO perspective, and sometimes it's like, what are they doing? Why are they doing this? We want to understand the full picture, because if I don't understand the full picture of where they're going, I don't know if I trust the loan either. I mean, I got to know that too, because I don't want to. I have a relationship with you guys. I don't want that to sour because I want to get a loan and get it done. I'm looking at this as building relationships with my with my lenders, and that's why you guys were wanting to join the call today, is because we have a relationship, and I want to make sure that we send you guys deals that you're not have to worry about collecting on later. It's not the fun part of the job,
Yeah.
right?
Yeah.
We don't like to get clients loans that aren't going to help them out in the long run just to get a deal done.
Yeah. I'm not a deal maker. We're a deal maker, but we're not a deal maker in that sense. We deal with what's right for the client and what's right for the lending atmosphere we're in today.
One of the advantages that you bring as well, your team brings, Matt and Ben, is that you guys have well-established relationships with folks like Charlie and myself, but you also have other people in the industry that you work with, right? Understanding that each institution has different preferences, right? That's why there's many of us. And while a deal might not work for us and you present it to us and we say, hey, you know what, right? Our appetite for that particular, industry or whatever is not there. It's the relationship still continues, right? The next deal that fits our particular appetite from an institution perspective, gets presented and like you've both said, right? They're deals that are solid or that at least been mitigated with anything that might be of concern to an approver. So when we get those packages, it makes it really easy to say, hey, look, yes, this is something we wanted to take a look at, or, right now we're going to pass on that because the appetite's not there, or our bucket for that particular product is full, right?
That bucket term is something we use all the time. It's just like you guys have buckets that you have appetite for right now, and then sometimes you get full, and in a couple of years that pendulum swings back around, the cycle changes, and now you guys want to do hotels again or whatever it is, the asset class. That's how it works, and that's where if we can work with good lenders and keep these relationships strong, our clients benefit. That's really who we're trying to help the most.
Yeah, we're trying to understand we talk a lot, really, Charlie. We talk quite a bit and trying to understand where you guys, we're not in that market right now. I know now not to send that deal to Rudy or Charlie because it does not fit what they're doing today. I don't want to waste your guys' time and go, I'm going to throw every deal. So when we select our lenders, we go, who's got an appetite for what today, right? If I want to throw everything at the kitchen sink, you guys will get a lot of deals, but some deals are not in your appetite right now. So, but and you guys are letting me know when that appetite is changing. So we try to keep that communication channels going. That's one thing we try to do with our lenders and our lender network is understand what's going on in the marketplace. And if we understand where everybody's at, then we can help better take care of our clients and also take care of our lenders. And I look at this relationship as 50-50, 50% with my clients, 50% with lenders like yourself. If I don't take care of my lenders, I can never take care of my clients.
Right, and that's where our appetite is constantly changing, whether it's due to regulatory hold limits or due to in certain asset classes, things like that, or whether it's just the credit environment. But this is where we're probably talking to you, Matt, at least probably once every 2 weeks, if not more often than that. And part of those conversations are maybe around a current deal, but it's also around how our appetite's changing, what are we seeing, so that you're always aware of. Just because maybe there was something we didn't like 3 months ago, maybe that's changed.
We got room in our bucket now for this deal. We worked on a deal earlier this year that you guys didn't have room. We waited a little while till you got a payoff, and we came back because you guys were really the right fit for that client on that deal. And that deal is, man, you got to be really far on that.
And we were able to tell you.
That was not
I think it was that deal too. We communicated, we talked about the fact that we do expect room opening up in that bucket. It was a hold capacity issue, but it was hey, if we can delay for a little bit, if they're not in a hurry, we are expecting capacity to open up there.
Yeah.
And it did, and then we were able to do the deal.
So that was one, again, we worked through that relationship thing, right, Rudy? We worked through the relationship.
No, absolutely. And this is just an example, right? This the conversations we have with you, Matt, are representative of the conversations we have with any potential members that we're bringing on board, right? We want it to be mutually beneficial. It can't be one-sided, right? Because as soon as something changes, that relationship is done, right? It needs to be based on mutual benefit. And the other thing that I would say that you bring and you and your team bring to the deals is that it's a lot of other brokers when they send a deal, basically they're wanting to find out, first question is what's your rate, right? And that's it. It's a one-time transactional thing, and that's what separates you guys from the other brokers in quotes that are out there, because I don't really put you guys in the same bucket as a broker.
Everybody always asks me, well, what's the rate? What can you shop? I go, here's the pricing out there. Here's the pricing. I mean,
You always give them a range because it's like, who knows? It is going to depend on the deal.
Every deal is different on pricing. Every deal is like, I can give you a range, like Ben said, but I can't give you an exact, and I'm not going to. If you want to treat me as a transactional person, that's not what I'm in for. One of the deals we closed earlier this year, I've been working with Parminder for 7 years. I met him on the ground floor or second floor of a construction of a hotel in dead of winter. I pulled up in a car, and now I've got a truck so I can pull up in the construction sites. But I pulled up in my car in the dead of winter, and here we are building a hotel. And we have fostered a relationship over the years where, in 7 years in, and I know how to work with him and work back with the right lender that finds the right mix for him. So, those interesting clients, and everything changes based on your guys' preference, what works. And we just had a conversation about that client yesterday, and I was like, yeah, we can make that work for you guys. If that's what you want, Rudy, we'll fix that. Not a problem, because we understand the relationship on both sides and how to overcome and get the job done. What's their ultimate goal for a client is really make them more money.
But you also have that relationship with your borrower. Is that when we talk to you, hey, this is where we're getting hung up. You can come back and go, hey, yeah, we can get there, and because you already know from your relationship with them that that's something that they're gonna. It makes sense. It's that CFO role where you're able to advise them and go, hey, this really does make sense. Let's get there. And so by the time you make that introduction between us and them, you've already really vetted everything out.
I was going to say, I would add to that relationship that you have with your clients, and Charlie and I have that relationship with our credit approvers, right? And the folks that are decision makers here, right? We already know ahead of time where they stand and what we can speak for and say, hey, you know what? We can make that work, right? And so we already understand our folks, you understand your folks. So it makes us having the conversation as to what potentially we could sell back to our respective groups very easy. We can high level say, hey, well, that might not work because I understand where our folks are at. We can have that conversation. You can say, yeah, I think I can get my client to that point as well.
Finding a solution to the problem, not just taking a no because it doesn't work right now in the current structure. Let's figure out a solution.
That's one reason I really, really like working with you guys. It's not just no, it's, hey, let's think outside the box, right? Because yes and no is easy answers, but how about this? Oh yeah, we could probably make that one work. Let's just talk through it as a solution. Really, we've done that on multiple deals. We just talk through solutions. We're up against this. What if we did this or did this? We try to find a way around that and overcome that as a solution that's palatable for both parties involved. That's one thing that we, strive on here is, advice first is our number one thing for our company. We try to live by that in the simple method. Those things are really what we drive on is, guys, at the end of the day, where are we at? Where do we want to go? How do we get there? Doesn't mean it has to be A to Z. It could be A to B to D to back to A again. I don't really care. Let's just get there. Let's just get to the end result for everybody.
I think one of the other benefits having you guys have CFO experience is that sometimes, people are so focused on just that rate or pricing, whereas getting the deal done sometimes is more important and more beneficial to the client, right? If you want price by itself, you might have other institutions that says, yes, we can do that. It takes a long time to get there. You've actually now delayed, if it's a construction project, the project by a couple months, then maybe winter hits. And now your cash flow is delayed by 6 months, right? So any savings that you had or would have had is kind of eaten up at this point, right? But you guys have those difficult conversations sometimes with your clients saying, look, it's getting the deal done. and making sure that you are in a position where that cash flow is being generated sooner rather than later.
Something that people miss, is everybody focuses on rate and they don't focus on structure or timeliness, right? And those two things, at the end of the day, it's all about how much money you're making. You're saving 10 basis points on a rate, but it's going to take you 2 extra months. It's really not that much money in the grand scheme of life. If we really look at a deal, people get focused on, I need a rate of this. I'm like, your payment only changed by like $25. Like, that's going to make or break the deal. We need to have a different conversation, right?
Absolutely. Absolutely.
It's not that's really more. Yeah. But I saved you 3 months by doing it this way, or are we able to bring a little bit less down, but you had which your return on investment is higher, whatever the structure may be, right? We structure things in a way that, oh yeah, you're right, I am making better money. Oh, okay. That's what the ultimate goal is.
Yeah.
Just like, if you guys have stock advisors, I do. Some people like to pick their own stocks, but my guy, they manage all that for me. He makes me more money, which is all his goal is, right? And I'm
Yeah.
trying to he has those tough kind of, hey, we need to sell this, do that. I'm like, okay, you do it. You just tell me what to do, right? Because that's the ultimate goal here is we're just doing it in a different asset class with businesses or with real estate. And one thing I want to add in is I think, to your son, I want to hear you guys' feedback now, adding Lydia to our mix, because that helped out our processes here with you guys too, because we do have a full-time processor that handles a lot of the back end stuff on stuff that we don't have to worry about here.
Yeah.
All that stuff.
Yeah, I would say adding Lydia to the mix is definitely improved. It was fine before, but there's a notable difference in the sense that it's almost like Lydia's working in our office as well, right? It's that kind of partnership where when I send stuff out, you know, I'll typically send it to you, Matt, and to Lydia, and Lydia responds immediately or gives me a time frame, right, so that I can work with what I have or mitigate something in the interim. But information is always forthcoming, quick, full, complete. So it's what Charlie and I have always said with most people that we deal with is help me help you, right? And when you can get as much information and the more we know, the more options of structuring and looking at different ways of doing something or getting something accomplished is possible. And having someone like Lydia who is readily available to provide the information, she already understands like what we need up front anyway. And the other thing that I appreciate about working with you guys is that you understand that while, like, for example, a personal financial statement that you guys provide has all the same information, providing the information in our form where our underwriters know where to go to and grab it and makes their life that much easier ultimately saves everybody time. And especially with the advent of AI, sometimes, I mean, you guys can easily populate the personal financial statement that you have into our particular form, our particular application. All of those things makes it a lot easier on our underwriters. Making it easy on them reduces their frustration. Their understanding of collaboration from us is high, and so they like to take our deals, right? As opposed to getting other deals where it's like, oh, I got to find this and I got to ask for that. When we're sending something to underwriters, it's pretty much a complete deal, so they like working on those.
Yeah. One thing we've got a lot better is file naming. I mean, I can tell you before it was not good, but I can tell you now when you guys get a file, you go, oh, business tax return, this entity this year. Perfect. I know exactly where to find it. We try to get that information because we know what it's like to be on your guys' side. We've been on that side, and
Yep.
a full file makes an underwriter's job easier, as we mentioned. But we also know that if you're asking for something, the underwriter requests something. If I don't get it back to you soon, I know where that loan goes. It goes from here back to the back of the pipeline.
Yeah.
If I don't get it to them in the next 24, 48 hours, I'm set back another week and a half.
Yeah.
Rudy's not asking me for something just to ask me for something. He's already vetted it with the underwriter. Why? You sure we need that? You sure we can't get away with this and this? Rudy has that conversation before it even gets to me. I already know that's happening. And
Yeah.
then Rudy asks me for these things. He's trying to answer any question he can before it gets to us. Same thing we do is since we try to delve in and do that outsourced CFO work that you guys were mentioning, is 9 times out of 10, I don't have to go back to a client and ask a question because if I don't, I should know the deal deep enough to be able, oh yeah, it's right here, guys. Go look here. Or I already have that file. I just didn't send that to you. I didn't know you guys want to need that. You know, we try to cut off any problems that a client's going to have to deal with because they're out doing their job, right? They're being a entrepreneur out there, typically real estate investors. They don't want to deal with paperwork and dealing with bankers all day. No offense to the bankers in the room. That's not their expertise. Our expertise is to handle this so they can make more money because they're, it's the same reason we outsource. I don't know about you guys, but I don't clean my own house. Somebody cleans my house for me every few weeks. I'm probably not the guy that cleans the toilet the best. If somebody else does that. I get my hair cut, as we were talking about earlier in this call, Charlie. I don't cut my own hair because I'm probably not going to cut it good. I'm going to miss some spots. Like, we outsource things in life where we see the value in our time versus what we're paying, and we realize it's a value add. We try to do that in our value add back for our clients. And when they come to pay our fee, they go, "Man, that was worth paying your fee. It was worth plus more. You guys should have paid. I should have paid you guys more than what you guys are charging." So usually those conversations go a lot easier when you go, "This is what I do for you." Oh, really? I mean, recently, the couple loan requests we had, their construction loans, I'm putting in all the construction draws for them. They don't need to do that. Go through your process, even though your process is really easy compared to most guys. I will tell you that.
But you go through like a construction deal where you're used to, the process, you've done enough of these. So instead of, a lot of times somebody's going to build something, it's probably the one and only time in their, in their career that they might be doing a construction project. So being able to work with someone like you guys who has done a lot of these, who understands, here's what the processes are, here's what's going to be needed. You make the whole thing just a whole lot easier to deal with.
Thank you. Yeah.
That's good to hear.
So many people, when I realized some of my clients were like, "I can handle the draw." And then I had a client, they can't handle the draw. And they messed it up with a lender and they go, "Can you actually take over for me?" I'm like, "I told you we could do it for you. There's no extra cost. We're doing this as part of you already paying us in the loan. This is just our value added service." Yeah, handle that going forward. Because they would put line items in, right? Sales tax is broken out on any budget. But when they go submit their budget, they put in sales tax on the line item. Like, no, you got to take out those sales tax, add it to its own line item. Like, it's just those little things that people don't think of that we try to get into the details and the weeds for.
And you wouldn't think of it because it's not something you do often. As somebody who's probably a first time and only to
build. It's not their everyday thing. And we have clients that have come to us and be like, "Well, we went to a lender because we tried to do it ourselves and it didn't work out because we didn't talk to them about this thing that you would have talked to them about." And the lender credit approval, because they found out at last minute, not interested in working on it anymore. Well, I was like, well, if we had been there, we would have helped you. We would have talked about it before it ever got to that point so that the deal could have gotten done. That's where we really try to work with the right lenders that can help with us on that too. Hey, work with us on the deal. Here's the information. Maybe there's a dirty secret in the law, like maybe he gambles or something. For this specific client, he liked to gamble a little bit. Didn't tell the credit approval team until it got all the way to the end, and then on his tax returns, the credit approval's like, "Well, we see you make some money gambling. Why have we never heard about this? Why isn't this written up and given the story behind it?"
Almost everything is going to come out at some point through the underwriting process. The more that we could just put everything on the table up front, talk through it, and be like, "Okay, yeah, thanks for letting me know. We could work around that. Not a problem, not a concern. I don't mind going to Vegas sometimes and doing a little gambling, and hopefully I've got enough to show my tax returns. Not typically, but it's not necessarily a bad thing. It's just addressing, being like, "Hey, you're going to see this. Here's what it is."
Yeah, I always tell my clients, I'm like your bartender or therapist. Tell me all your deep, dark secrets. I need to know everything now. Like, why? I go, I need to know it all. Tell me any hidden things because it's going to come up sooner or later. And I need to be able to address it when it comes up. And I address it, and I need to address it now with you so we can address it when it comes up with the lender and we can overcome that. And then we're being more honest and forthright with you guys, and it's nothing caught at the 11th hour. The last thing you want is something caught in underwriting the 11th hour, and they go, "Well, what about this?" If you
Yeah.
would address it early.
And nothing delays a deal more than those surprises, right? Underwriters and credit approvers do not like to be surprised.
That's where I think our underwriter does a really good job of trying to capture that in the commercial loan requests we put together of what is the story. And obviously, there's all the paperwork you got to go through as well, but that story I feel like is captured really well in a lot of those loan requests.
Sometimes when he's requesting stuff from me, I'm like, oh God, okay, you're right. We need to get that. You're right. He's like, I know we don't need this for underwriting, but you're going to need to get this and this. I go, I know we need to get this and this. I'm requesting it. Um, so that does make me feel good that, my underwriters, they're making sure he's underwriting the same standards that you guys are underwriting. Like, hey, you're going to need these leases. I go, I know. So we don't have them on file. I need to double check the leases, whatever they might say in there. I need to make sure they're paying true triple net lease, right? Not what the client told us. I need to make sure I read the language. So we try to delve into that because we've had those situations. Oh yeah, you get the lease, and yeah, I guess it's not true triple net. They got to pay this and this from the investor. Yeah, that sucks. That kills the cash flow.
Yeah.
We need to know that up front. We need to structure it differently. And yeah, so our write-ups, that's a good segue, Ben, is our write-ups. We try to provide very good detailed write-ups back to Rudy and Charlie so they can take it, understand the deal, and get their credit team on board. And how's that work? How's that process work for you guys?
It works quite well. What we do is we take the information you guys provide in that CLR, commercial loan request, and put it into our own particular pre-flight, document as well, so that when the underwriter gets it, or at least the credit approver folks, when they get it, they have a really good high level understanding of what the deal is, right? And if there's any issues, what those mitigating factors are. So the CLRs we receive from you guys are highly detailed. We take some of that information and take some screenshots and put it into our own format, but it's quite helpful.
Yeah, I think it was recently on a deal. You go, can you go update your CLR with that new information so we have the right information on our end? I'm like, I
Yeah.
go back to my underwriter and I tell him, he's like, really? I go, yeah. I go, take this as a kudos to you that we do such a good job. They want the updated document on their end because that helps them navigate and push through for credit sign off to give us a term sheet LOI on that deal.
Yeah, it goes back to the conversation we had earlier, right? Like we'll get a CLR, and at that point, we're like, right now, that it's not a no, but it's not a right now. Let's wait a couple months, and then when the couple months have gone by, right, we'll ask for an updated CLR, and it either confirms what we thought we were going to be after that period, and then and so we don't necessarily present to our folks until we feel completely comfortable with the deal, right? So we gain that internal trust as well with, okay, these guys are presenting something that they've already vetted. They've done the due diligence up front and aren't presenting it and saying, hey, it's going to get better. It's like, we'll wait till it's better, right? Before
Right.
on. So that
It's going to get better, Ruby. I promise you, it's going to get better.
so, but that comes from having a mutual understanding with you, Matt and Ben, as to hey, look, we all understand the particular constraints that we have for the organizations that we work with and the industry that we're in, and the economy and all the other external factors, and and so when we're presenting something, we feel pretty comfortable at that point.
It's all about making the request in the best chance for success. I feel like
Yes.
you can't just throw it out there and hope you get interest. Like you got to really put it all together and make sure you got it all nice so that then when you get it, it's in the right timing on your guys' end so that we can get that yes, not just a no, because if it's no, it's probably going to be no forever for a while or for a near future.
I think this is one of the differences between you guys and other brokers. Is I do think a lot, and not all other brokers, but there's a lot where I think all you do is you do just get the here's a package, is it yes or no, versus going through the thought process with you guys, going through what's the end goal? Is there a different way to get there? Instead of just coming in and being like, what can what terms can you give me on a 20-year commercial loan? It's like, well, hold on, before we get there, like, what are we trying to do? What are we trying to accomplish?
I actually had a client yesterday, a new client, and they're like, well, what's the rate? And she was telling me she was talking to one bank. I go, have they looked at anything on your deal yet? Do they understand the cash flow? Do they understand your tax returns? Especially when she told me who her CPA was, I go, so you're probably not showing any income. I already know this is going to be an obstacle. You're not going to be able to get this done conventionally, more than likely. I need a full packet before I can give you any vote of confidence that yes, move forward on putting an offer on offer on a piece of real estate, because this might be a projection based deal, which means we're not going to go conventional, we're going to go SBA, because you just told me what your adjusted gross income was last year, and I go, because I'm making more than that. I go, I know who your CPA is. He doesn't want you to pay taxes. You just need, and then this is where my advice comes back. I go, you need to tell this CPA specifically when you're going to be buying something, so they can make sure that they're not getting aggressive on the tax law. They're making sure that you are paying taxes. It might suck, but you're able to grow that aspect. You're able to grow your business because you had to pay some taxes. They weren't aggressive with the tax codes. They made sure that they understood that I need to get lending. Like, let's have that conversation with your CPA up front before, well, you shot yourself. It's going to be a couple of years before you can do anything because they told you lost money every year, but I see your bank account. I don't think you're losing money. Let's have a different conversation here. It's about your CPA, not about your operations, which is cool. We all go through different stages in life, right, with CPAs and tax code and how you use the tax code in your favor.
Yeah.
There's nothing wrong with that. But understanding that situation, that person is going to not be able to get that deal done for you because they don't understand what you're asking. You haven't given any information. Oh, the banker said they could do this. I go, it's not going to happen. And next thing you know, they're back to me 3 months later going, I need to get this fire put out. I need a loan to close tomorrow. If we would have gone from the beginning, we wouldn't be in this situation, guys. That advice first thing, it sometimes burns me, but it usually gets me a client in the end because they go, I should have listened to you. I should have done this different way. Yeah, that's okay. That happens. It goes back to the rate conversation, Rudy. I had a client earlier this year. They wanted the best rate, and they were going SBA, and they want the best rate. There's only a few lenders out there. We won't not say their names. They offer really good rates, but to get to that rate, it is not short time frame, and it's not unpainful. It is a very long process. And he goes, after the deal's done, he's like, yeah, probably should have listened to you. We probably should have just got this deal done. I would have had 2 months more of income, which more than pay the interest rate difference I would have paid on this deal. I would have made more money, been in a better position. That's the last time I go ask for the best rate.
Yeah.
Because rate's not everything.
But
It's
that
not.
goes back to understanding what the end goal is, right? And to be like, okay, if you're like, hey, we're 6 months ahead of this anyway. I'm not in a rush to get this thing built. I've got the time, which you can then advise them, like, okay, if we've got this kind of timeline, we can do this, and we could probably get you a better rate. Versus hey, the sooner we can get this built, the sooner we're going to get cash flow coming in. Be like, let's give up 25 basis points to get this done because that's going to put more money in your pocket in the long run.
They were trying to buy a business, and they did not buy it right before the busy season. They were over a month after the busy season started. So he's like, I lost over $100,000 worth of sales by not closing this transaction. I go, we had the conversation in the beginning, but you want to go that route. And sometimes the client's not always right, but sometimes you have to, you advise as much as you can, but you can't actually make them take your advice. You got to sometimes oblige to what they want. And you go, yeah, next deal we'll do that different. I'm like, yes, we should. Yes, we should. $100,000 of revenue versus saving a few $1,000s on rate was not worth it.
And this is, I think, where a lot of times we hear it's like, well, why is this member who is now our member, why do they still want to go through AAI to do this next deal? And why don't they just, it's their time is valuable, and there's a hassle factor, right? That people are willing to pay for really good service. I mean, we do that all the time, right? We go out to a restaurant, and if you get really good service, you're willing to give 20-25%, if not more, right? Because they made it enjoyable. They made your evening, your process enjoyable, right? And I think that's testament to AAI with the amount of repeat business that you get, right? And these are folks that are multi-million-dollar individuals in net worth, but they're willing to pay the fee because of the level of service that they're getting. They obviously see that fee is bringing them great value.
Yeah, you brought up, I did a deal with a lender earlier this year, and the lender's like, they're already a client of our bank. Why they come to you? I go, well, we're able to think outside the box and structure this way. Oh, it looks like a really black and white deal. It wasn't. And once you delve into it, you're like, well, we're going to refinance, we're going to pay this off, we're going to pay this off for the refinance of this. This improves your debt service coverage ratio, your global, and your property cash flow by doing it this way. If he would have just presented his offer to the bank the way he would have offered it, he probably would have been declined because he didn't go, well, let me go pay off my RV that I have really expensive debt on that can turn it into a 25 year amortization, right? Let me go do this. No, they look, lenders, no offense, most lenders look at it as, here's your request. Nope, don't want to do it. And that's why I like working with you guys. You guys probably would have found that and go, hey, what if we structured it like this and change it this way? Or we pay this off as part of the refinance, the cash, we can increase the debt load on this to overcome this and actually improves their overall cash flow, and they're in a better position tomorrow. That's what we try to do. And that's where the bank goes, oh, okay, I guess you're, and he never admitted I was right, but I would, maybe one day he will. But you're right. The clients come to us because we try to make their life easy, simple, but we also try to come over obstacles that they might not know how to come over with a bank, because I know how to speak back with lenders and banks and what you guys are looking for and how to, oh, yeah, you're right. That is a problem. Oh, what if we do it this way, guys? And we try to do that. And most clients today, especially in today's environment, guys, I don't know how clients go to banks unless they got somebody on their side. If they have their own internal CFO maybe, or somebody else is doing some of this work. I do not know how you go through the banking environment, the lending environment, credit environment that we're in today without somebody on your side. There's a lot of challenges, a lot of things you guys are requesting that you weren't requesting, 2 years ago, 3 years ago. People are like, what, I gotta get that now? I go, we're in a different environment. Just
Right.
things change. Well, last time I got a loan, last time you got a loan, people were giving out money like it was just whatever. It just didn't matter anything. 21, right? We're just giving money to anybody that could breathe. 2025, you actually now need to get a physical. You need to do these things and make sure you're going to actually
Have
live.
life insurance.
Make sure you're going to last a 10-year term on this loan. Make sure you're going to last this long. We want to make sure it's not that bad yet, guys. If you guys start asking for physicals, that's going to be the next, that's nail in the coffin for banking.
Yeah. We're gonna.
Driven regulatory environment, Matt. Usually it's we're just trying to, we're playing by a big set of rules. So, and those
Well,
rules.
and we
Yeah,
always have to explain to clients when it's like, hey, it's just to check the box. They just need the documents to check the box. Don't worry about why they're asking for it. Just give it to us. Like, we have
right.
a client
This
yesterday.
is
Why,
for
why
regular.
do I need my 2024 tax returns? I thought we were basically approved. We are, but they need them because they know you should have them by now. So we need them. So just give them to us. Don't worry about it. It's not changing anything.
Why do you guys care about this document? I go, this document is for regulatory purposes. They need to check off, I hate to say it, check off a box. But also fulfills this requirement. Oh, you put it like that. I guess that makes sense. I had a client on an SBA deal a week ago. Why are they asking about my operating entity? We're buying this with a real estate holding company. I go, SBA is about the operating company, and the operating company, number one, the real estate entity is separate in it, and in regards from how they're looking at from a cash flow. when I started explaining to them, oh, okay, that makes sense. That's why they're delving in so much into the operating company, because that's who's actually going to be paying the bill. And that's what they care about. And sometimes we had to take that step back. And at least with our knowledge on your guys' side of the table, I'm able to have those conversations and go, well, this is what they're asking for. And this is why they're asking for it. And this is what this is going to overcome. And they go, when you explain it like that, that makes a lot of sense. One great example is SBA 7A. They always put a lien on your primary residence. And people go, I don't want to lien on my primary residence. I go, you're personally guaranteeing the loan. The difference is SBA is up front. If you default with another lender, they're going to put a lien on your primary residence because you personally guaranteed it. I feel like that it doesn't matter. I go, it doesn't matter. So those conversations we're able to have because we understand your guys' side of the table that some just don't understand banking. Most of them have never been in banking. I would guess a lot of brokers out there have never been in the banking world. That's my
Yeah.
guess, but I don't know.
No, I would say that is probably a very true statement, right? And I think it goes back to how we started the conversation, right? We've all kind of been in each other's shoes, right?
Right.
Charlie through owning his own business, so he understands from the perspective of when a member or potential client walks in the door, they want to make their business run, right? And so it's having that understanding. And Charlie, is borrowed as well, right? So he understands from both sides what is needed, right? And
Yeah.
so having that common knowledge amongst this particular group as to what we're dealing with when we're looking to do a deal makes it a lot easier to work with.
Well, and we
Yeah,
wouldn't
I
be able to
think,
do our
Charlie,
jobs without good lenders like you guys. So
when Charlie's being asked for his annual financials and he's like, I get it. I get it. I know what they want this for. It makes it not as painful, but you still go, I get it. I understand. I have so many clients that still use us for their annual due diligence. Like, oh, what do I guys submit this? I go, it was in your loan covenants, and every year they require these documents to make sure you're still adhering to the cash flow of the business. But I'm paying my mortgage. That's just one thing that has mattered here. Is well, I can go get a home loan for $1 million, but you're asking for my due diligence on $800,000 loan.
Yep.
Now, can I explain that one back? That one's a really hard one to explain. Like, oh, that guy just walks in and get $1 million loan, but I want $1 million loan. I have to do this, but then every year I got to do this. I have to explain to him what's looked at in commercial lending, how regulators look at that compared to how they look at home loans. Because once I explain that to them, and they just go, "Can you just do this for me every year?" Not a problem. And that's why we try to be sticky back with our clients is I'm getting updated information every year. I can figure out opportunities inside their portfolio and try to keep them a client for life because I'm providing that basically the life of the loan service back to them on their behalf on what they paid up front. We try to again take that pain out. As so many clients go, can you just do this, complete this for me? Not a problem. I'm here for the
Yeah.
next deal. I'm here for that next deal
Yeah.
for you.
No,
Please remember that.
no, I think that's a great service that you and your team provide there, Matt. Is that you guys understand the full relationship, right? And so most brokers, it's a one and done. And as a banker, it makes our lives difficult when there's no relationship there, and we can't go to someone to say, "Hey, you understand the loan documents, you understand that people signed up for these things, and that they're supposed to provide them." So that we can meet our regulatory requirements and makes our lives that easier, right? So
Yes.
when these folks that just use a standard broker that it's just a package and there's no relationship and there's no recourse for trying to go and get someone who brought the deal to you to ask them for these things that we need on an annual basis, it truly becomes a one and done, right?
Yeah.
Our folks are not ready to lend them going forward because of the lack of performance on their end with regards to providing documentation on an annual or continuing basis. So
Now,
yeah.
back to the relationship with the clients, we built up long-term relationships where I invest with half my clients. I mean, we got a deal. I'm willing to invest with my clients, and they're willing to bring me on as an investor because we are a team, and they bill us as we're a partnership, not a one-off transactional base, where we can go have dinner with them and go out and even vacation together with clients here and there. And we have that relationship where we are building up because they see us as more of a partner and their grand scheme of their big long-term business plan, and not just a one-off pain in the butt, got me a loan. No, I'm here for long term. And that's really where we've got most of our business. When we first started out, we got most of our referrals from banks who couldn't do a deal, as we mentioned earlier. Things just don't fit in your box. But then we get so much referrals from our own current client base because I got a referral, what was it, a few weeks ago, like from somebody I haven't dealt with in 4 years. They go, call Matt Russell over here. I'm like, okay, that works because we took care of that client and they remember that we took care of them. And if they ever need anything, they can pick up the phone and I'm here for them. We try to separate ourselves. Is it more work for us? Heck yeah. Is it worth it? Yes, because I got to look myself in the mirror every day and know I'm helping my clients in the best case for them. I'm raising two daughters and know that this is how we treat people and we take care. This is how you do business. This is how you really do business. I'm playing the long game here. I'm not here for the short time. I'm here for a long time. I may look a little old with the grape, but I'm in the 40s. So, I'm not Rudy in his 50s over there, but Rudy looks better than we do. So, I'm here for a long term for my clients to make sure that they're taken care of and they know they can rely on me. So, we've been talking about this for 7 years. I drive that in in our meetings. It's like, guys, let's take care of our clients. It's the extra steps are worth the extra steps, guys. Like, it is worth it for the long-term relationships. And Ben's built up these long-term relationships with his clients because he's got that same mentality about it. Now we got clients for life, man. Like, they're not just clients, they become friends. And that's what we care about is you want to do business with people you like. In the day,
Absolutely.
I don't want to do business with. There is how many different loan officers at STCU, and you guys, I like you guys. There's how many different loan officers play. I find I can go to different loan officers, but I know who's got a better working relationship, and that's why I value you guys' working relationship. Is I know when I call Rudy and Charlie, something's going to happen. Either they're going to tell me quick no, which I don't mind a quick no. It's better than a long drawn out no 3 months later. No, you couldn't just told me 3 months ago you're going to decline this. But we had their, but I know they're going to say something, they're going to do it. They're going to do it. I trust their word. I trust their credibility. I think that's why their move to the credit union world is actually a really good move because they've always treated business in this aspect of you're not just a number. You guys look at relationships and you guys value that too, the way you guys have always done business. But other people on my team here go, and Rudy and Charlie, they know how to take care of things. I'm like, yeah, every time I call them, I know it's going to get done, guys, because they care about the clients. They actually value their job. They actually value what they do, which is hard
Value
to say
those
in today's
relationships.
2025. Not
I think it's the same thing as with you. A lot of our clients, there's a relationship. They are long-term people. There's friendships that are formed out of these long relationships. So yeah, I care a lot more about doing right by the people that we work with, just like you would a friend. So
Yeah, awesome.
you treat them like not don't treat them like family, treat them like a friend.
Sometimes treats friends better than family.
Family, you don't.
Yeah, you get to choose who your friends are. Your family, it is that, right?
We get to choose our significant other. We get to choose our spouse, our wives in our cases. That's the only thing we get to choose. Everything else is given to us. Our kids, we didn't get to choose how they came out, but that's what happens. So I think we're all doing okay in this call. I think our kids are pretty good. Ben's kid's too young yet. She's only a little over 2.
It's still
figure out how
too early to
she
tell.
out.
We'll figure out how she works out.
My 6 and 13-year-old are doing okay, and I think Rudy, you've raised two daughters, right?
Yes, 2 daughters.
Yeah, I think across the board, I think we've all got daughters, right?
Yeah.
Yeah, you got daughters. Yeah,
You're all girl dads.
Girl dads, yeah.
I rock the girl dad stuff. We must be doing something right. I think you guys have raised great women. I know that. Just talking to you guys over the years. So we're going to try to follow in your guys' footpaths as raising great women because, I don't know how people raise kids in today in 2025, but you guys got out of it before we had to get into it. So I'd like to wrap this up with you guys. Thank you guys for your guys' time today. I know it takes time out of your guys' busy schedule, but it's valuable to show that we have a great relationship with our vendors. And I want to thank you guys back with you guys as our great lenders. And we got a couple deals in the pipeline, maybe a couple more coming. We'll just continue to work together, guys. And I value you guys as our working relationship. And hopefully you guys can get back in the office here next week. But I kind of like your setup at home, Rudy. You just look like a scholar, like Ben was talking about earlier.
Hey, there's probably some math books and some engineering books back there that I don't really understand, but yeah. That's
Is that why you got out of engineering?
Yeah, exactly. That's a story for another day.
Well, again, thank you guys so much. It was a pleasure to hear more about your guys' experience of working with us, and I think it will be helpful for people to understand a little bit more about what AAI is and why we're not a traditional broker.
We appreciate the mutual friendship and partnership that we've shared with AAI over the years, and as most relationships, right, it's got to be mutually beneficial, and this is what it has been, and look forward to continue to work with you guys.
Awesome. Well, guys, thanks. Have a great day, and thank you, SCC, for allowing Charlie and Rudy on.
Thank you.
Thanks, guys.